Let's go to the Reserve Bank and just what it's done this week, because many people thought it might roll back this so-called tapering of buying back of government bonds, but it's actually even stuck with its forecasts, improved its forecasts in some areas about where Australia's economy will be in a couple of years' time.
Yeah, thanks for having me, Ross. The Reserve Bank's very comfortable with the policy settings as they sit. They're highly stimulatory, we know that, and they made the point that the economy ahead of these lockdowns had actually been doing better than they thought. They think, quite rightly, that the appropriate way to deal with the lockdowns is through fiscal policy, through the income support measures that the government's put in place. And monetary policy has very little to do here. They've got rates at rock bottom, QE's in play. Some were thinking QE could be boosted, but they've held off on that for the time being. So they've taken some growth out of this year because of the lockdowns and put it into next year, i.e. they're expecting a big bounce back once the economy's open and once those vaccination rates are up. And they've also got inflation also heading higher over the next few years. So I think there's some hints there that market view that rates could go up at the end of next year or early 2023 is starting to sort of form up in the Reserve Bank's mind as their central case.
So, Warren, does this ring true for you that the Reserve Bank, notwithstanding the instant lockdowns being imposed on our communities right now by state premiers, that really that the economy can get back to normal, as the Reserve Bank suggests?
Well, I think they're confident that we'll get a bounce back because that's the history. I'm concerned about the reopening being more gradual than what we've seen in the past year. And there's two things here. One is, particularly in New South Wales, these restrictions are going to be eased very, very slowly over a period of time. And the other thing is we're going to be coming out of lockdown into a living with COVID environment rather than a near zero COVID environment, which we've experienced in the last year. And I think that'll put some more caution into particularly things like hospitality and arts and recreation, this sort of thing. So I think the recovery is going to be a bit more gradual than what we've seen. And that means that really it's 2022, the end of our summer, where we can expect to see that real strong bounce in activity rather than in Q4.
Yeah, OK. So, Warren, one other aspect of this, and that is go across the Tasman to New Zealand, and there they seem to be almost more advanced than Australia in regards to even where the central bank, the Reserve Bank of New Zealand, sits right now.
Well, it looks like they're good to go to be one of the first central banks in the world to hike rates. They had some very strong inflation figures a few weeks ago. Then last week they had a huge fall in unemployment, biggest ever since the mid-1980s, where it's back down to where it was prior to the pandemic at 4%. And the market is all but penciled in a 25 basis point rate hike for the 18th of August, toying with a 50 even. The big difference between Australia and New Zealand, because there's a lot of similarities, is firstly that they haven't had the Delta outbreak, but secondly, that their government has asked their central bank to be a little bit more cognizant of the effect of high house prices on the affordability and what it does to young people. So they're turned quickly, and they're looking like hiking rates in the next few weeks, which I think suggests that there will be rate hikes earlier than expected from other central banks once we get over this Delta variant, including here in Australia.